All right. I wanted to put together this video this morning to kind of clarify some things that people don't quite get in regards to their credit score, their FICO. And it really is a battle between your actual cash flow versus your debt to income and some other factors that come into play. But my main purpose of showing this, doing this, was to show that cash is going to always be king. You got to learn to think like a banker. A banker's job is pretty simple in that his product is money. He only wants to lend money to people that are credit worthy, and your credit score is an indicator of your ability to pay back a loan, and that's what he's looking at. It's just common sense. It's like everyone's got a relative that borrows money from them. They may be on drugs, they may have a gambling addiction, whatever the case may be. But whatever the issue is, that the actual chance that they're going to pay you back is pretty low. It's like between 0 and 50-50 at best. Whereas you got someone who's solid, the emergency came up, and they know how, hey, can I borrow a few $100s from you? I'll pay you, at the end of the month or whatever. They're working, they're good for the money. Same with banks. That's all they're looking at. So I'm going to use my actual credit score here. I mean, this is my stuff. But what I wanted to point out to you were these dips here that are happening in my credit score. Now, this is the snapshot of roughly the last 3 months. So I was somewhere 706, 709 around here. And what happened at this point, which would have been almost exactly 2 months ago. But what happened here was that in order for me to get my mortgage approved, I had to clear out all of my debt. At that time, my debt was no more than the money I owed on my vehicle and what was on my credit card. Now, that amounted to, I think it was about $10,000 on my credit card and roughly $50,000 on my vehicle, because I have a relatively new vehicle. It's only a year old. So $65,000 later is where you see this little spike here, because I paid that off. Boom, got a spike. Now, the funny thing is, TransUnion Credit, which is the top one here, they love to see payoffs, basically. They love to see on-time stuff. TransUnion really reflects your consumer credit worthiness in terms of low-end purchases, whereas Equifax is a reflection of the larger things like your car, your home, your boat, your RV, things that are above $40,000 or greater. That's where Equifax comes in. Anything lower than that, TransUnion is affected. Now, as you can see, when I pay those things off, I got a boost here, but I got penalized over here in Equifax. Isn't that amazing? So because they said, well, gee, guy doesn't have any debt, so we got nothing to reflect back on, whereas here it says, hey, he's free and clear, and he's good to go. Now, some of the other factors that factor in this is how much income am I generating every month that they're seeing on my bank accounts? How much savings and how much of a tax liability does this guy have, which they can see, because all that's public information, your IRS records, things of that nature. They get factored into that number as well. Now, here we are in September, right? And my credit score went up to 727. From here, it was like 688, and I got a spike. And a lot of people are wondering, well, what was the spike? Well, the spike is a little trick that I learned years ago. These two, Aqua Finance, is a $7,000 that was financed on my security system, water softener, and camera system for that home I purchased. And it's Flagstar Bank are the holders of my mortgage. Now, what's happened is the first time they sent me a payment statement, I typically do what I call a half scenario because I try to get out of debt as quickly as possible. I take the total number, which at that point was about $1,700, and I paid $36.18 on that debt. I cut it in half. And then the next month, which is actually this month, I also cut it in half and paid $1,700 and something on that. So that next month when I see a bill, I'll owe $1,700 and I'll cut that in half. And then that's how I pay my stuff off. And the money that I'm paying this debt off with, I also, the additional income or revenue, or however way you want to look at it, I also put that towards back into the principal. So they're looking at this and they say, well, he's paid the interest, but he's paid, in addition, he's paid $845 off on his mortgage. I already set this up for an automatic payment to add one additional payment. So I get 13 payments a year. Just by doing that alone, that takes my 30-year mortgage into a 20-year mortgage. But I'm going to crush this thing out. And this house should be paid for within roughly 5 years. 5 to 7 at most. But that comes down to consistently breaking that principal down and making sure that things are paid on time, every time. Now, I wanted to point some things out that are factors in what we're doing here. Now, what the credit companies are looking at in my bank account, what you don't see, and I can actually put that up here as well, but this is what's happening behind the scenes that you don't see reflected in this number. They see that I create a cash flow in excess of $10,000 per month, okay? They also see the values of my savings. And the key number here, always keep $10,000 increments. Your life changes at $10,000. That's a number that gets their attention. So if you have savings of $10,000 or more, you're going to notice your bank's going to start pushing different kinds of products towards you because they don't make money with your savings sitting there. They want you to, utilize that money and do some other things in services they offer as well. They want to, keep you in debt, so to speak. They also look at that my debt elimination is greater than my minimal payments. Never pay the minimal amount on anything. I mean, that kills your credit more than anything else, because what that says to a person that's looking at your credit is this person only has the ability to pay the minimum. So if all you're paying is the minimum, even if you pay it on time, you're basically sending a message that that's all I got. You squeeze this stone, the blood out of this stone, and there's no more money left for me to give you. So always pay greater than whatever the minimum payment amount. I always say try at least double it as a minimum. They look at the total debt to income valuation of the cash that flows in and out of my account. And they also look at my tax liability. And that's why that's a reflection of this. So as you can see, once I got rid of a lot of things and then the new debt, they're saying that debt's getting crushed. That's what gave me this spike. Now, this number is actually going to go up again in October because they do these valuations. I think it's every 2 weeks or every 14 or 16 days, something like that. Anyway, so although it's showing that my credit is in good shape, it's actually better than this realistically. It's going to go up probably about another 28 points or so based on me clearing out, all that water softener and all that new debt that I put on here. Because new debt always creates a ding. And that's why there was such a spike from the 600s up back into the 700s, because usually my credit actually should be around 787 or 747. I usually stay around that range more or less on average. And that's the thing you want to do. Now, I know this is going to sound crazy to a lot of people, but you really want to create 40% of income in addition to whatever your income is from your job. So let's just say if you're making $50,000 a year, you want to create an additional $20,000 a year above that number, which will give you a total income of $70,000 a year in gross numbers. Now, there's all kinds of things that you can do. And typically what I do is I look at where you are now, and through some tax, changing your tax structure and creating less liabilities, eliminating debt, and just come up with a game plan for you to really get this thing going. Because at the end of the day, you want to be you want your cash flow to be heavy, and your debt to be eliminated as quickly as possible, and that's what I do. So if you would like for me to take a look at what you have to offer, it's pretty easy to start. Here's my, my solicitation, so to speak. Go to cashflowandcreditfix.com, get on my list there. I'll give you a call back, or you can text me for a consult. Doesn't cost you anything. Let's look at what you got. Let's see what we can do to make things happen for you, and see if we can get you cash heavy and get your debt down to zero and get you financially sound. Now, that's all the magic I got for you. That's all the magic I got for you. Contact me as soon as possible, and I'll see you on the other side.